Morning, everybody. It's the 26th of November. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning.
All good
Or is
today?
it? Or is it
Or
good
is it?
morning?
Yeah. Bit of a bloodbath to start the day today.
That's
A
very,
huge increase in volatility. So get straight onto the headlines then. So there's a new coronavirus variant that's been identified in South Africa, and it has scientists worried about a high number of mutations in its spike protein. These spikes play a big role in how the virus enters the body. They're also a feature targeted by they're also the feature targeted by vaccines. So whether or not the vaccines are effective against this new strain, we'll have to wait and see. But it's got the markets totally rattled this morning, and we've got huge sell-offs in risk assets today. So we'll come on to the charts of that shortly. I mean, it's being felt across the board, but it looks like crypto is really getting a bit of a hammering, as to some of the commodities and, of course, the equity indices. Um, Elsewhere, I mean, everything else just seems to pale into insignificance at the minute in terms of news. There's a few bits and pieces going on with French fishermen, and obviously what's going on with Brexit, which we're all very bored of. We've also got the build-up of forces at the Ukrainian border from Russia. So, again, that potentially is factoring into the risk-off outlook on markets today. Steve, what's catching your eye this morning? Is there anything? I mean, obviously everything, but anything in particular in terms of an asset class that you want to start with?
um, yeah, I'll start with indices, but when you say what's catching my eye, nothing because it's moving too fast.
Yeah.
Gone are the days where you could sort of sit here, trade on the screen and watch the price move. It's too fast, mate, for me,
Yeah, I mean,
for
it's
the old boys.
apparently being exacerbated by the fact that we've got low volumes as well, because obviously we had Thanksgiving in the US today. Although the markets are open today in the US, they are only open for a half day. So that is obviously playing into why we're seeing, these erratic movements in price.
Yeah. Okay. Yeah, exactly. Low volume. Well, it says low volume, but then if we look at a volume indicator in the European markets, especially the CAC, I wouldn't be surprised if we've got a high volume, but it is that, like you say, there's a lot of market participants, maybe not really in on the US side of things, which will impact across the globe because obviously all these markets are very interlinked. So let's start with the FTSE. And really sort of like try and show this maybe on a weekly chart, because we can see that we had the bearish engulfing on the weekly chart last week. It was a evening doji star formation, which we talked about at the start of the week. So we needed that follow through this week. We had a rally up, got up to about 73.12. 73.15 around that level in FTSE during the week, and now we are collapsing into some support coming in. Well, actually, no, that was a previous resistance, which was a 78.6% fib retracement. So let's get rid of them and see where the real support is. We could draw a trend line from maybe to try and get some sort of intermediate support. That's coming in around about now. We've got 2 points connected, obviously, so that's a tentative one. And if we close below there, then that will negate that trend line. We have 3 points here on this trend line here, which is also previous swing lows. So this, for me, 68.10 is the significant support, and really whether we get a continuation in this negativity into the weekend, there's a good potential we're going into the weekend, no trading over the weekend. So if the news gets worse over the weekend, potentially we've got a gap down market open on Sunday night, Monday morning. So that's a real concern. And gun to head from yesterday. I'm sure we'll talk about it later, but
Yeah, mine looks like that
timing.
as well. I got actually
It's a bit
lost on
of
it
timing.
yesterday.
Dear, oh dear. Obviously, we closed the trade idea of our gun to head challenge at 9 o'clock, 9 p.m. UK time. This happened between 10 p.m. and 2 o'clock in the morning, that candle there. So, yeah, that's the news that has impacted. We're looking, if we look at this, so we're on a 4-hour charts now. Similar sort of price action on the weekly charts for the European indices. So DAX has had a really aggressive sell-off. It's bouncing at the moment. It got down to 15,300, which, if we look back, there was some peaks here when we broke up above it. We haven't been really the lowest we've been since, let me move that out of the way, October this year. We've just absolutely smashed through it around about 15,400. So a close below there would, for me, open up potential further downside for next week. The CAC, we'll look at the CAC. We don't often look at the CAC. We tend to ignore it. Sorry, buddy. But for me, 6,915 was a key support. It was a previous swing high and reversal line from August. When we punched up through it, we haven't been back here, or we punched up through it in start of November, and now we've absolutely hammered it. So the CAC, I don't know whether there's been sort of any cases of this new variant in France, and that's why maybe it's exaggerated a bit more. Support really coming in between, well, just above the 6,500 level, so it's another 300 points away, which would be another 3% maybe. So that's a concern. Obviously, remember, we've got limits as well in the US markets, particularly a 5% limit down, 5% limit up, and that's when the market stops trading. So be aware of those if you have got positions and the market is approaching a 5% move.
You think we could see that today?
I don't know. I think this is an initial reaction. We're seeing traders initially panic selling, get me out. Maybe there'll be a little bit of more reasoning, thinking this could be maybe not as bad as it is, or just that sort of hope, maybe it's not as bad as it is. But obviously, if we really look at the weekly charts, Joe, we can see where we've sort of come from the pandemic last year, and this move up is absolutely ridiculous.
There must be some fragile, weak hands up there, I thought, looking for a catalyst to just get out, right?
Yeah, I mean, if you think about what percentage retracement we have, it's nothing. There's been no retracement whatsoever, yet we're down, anywhere on the CAC 250 points. On the DAX, we're down 500 points. It's sort of like it feels like a really, really bad day. But in terms of the overall move, it's nothing. It's a little minor blip. So if we do get a serious correction, you're looking at sort of like on the CAC, you're looking at another 1,000 points lower, which still be classed. Bullish. Yeah, it'd still be classed as bullish.
Can you get an uptrend going from those lows?
Yeah.
I'd like to see if that marries up with the 38.2. Probably does somewhere along the way. Maybe not now.
Yeah, probably did. But not because it's such a exponential sort of like aggressive channel higher that we've been talking about for months. It feels like I've been talking about it for like
since March 2020.
Yeah, exactly. But even from here, I mean, that reaction here was okay, and there's a little bit of a correction. But so this has turned into a really impulsive move, but a really it's the angle of the impulsive move is just too high, and it is unsustainable in markets. That's what creates bubbles, and so we're seeing this bubble. But the markets are bouncing back as we speak. In the last hour, they've had a sort of pretty decent 200-point recovery in the DAX. So yeah, let's try and sort of like see what's happening in the other markets. Maybe even look at the again on the Dow. Look at the sort of like that sort of move. We have been showing signs of topping out. Again, we peaked at 36,000, just above 36,500. The support we've broken through this morning, which is 35,100, which we were sort of talking and laughing about before, thinking it wouldn't get there this week, but hey ho, it doesn't take much. On the weekly chart, Nasdaq is a bearish outside candle at the moment, especially if we close below the current price, 16,220. That will take out last week's open. So a close below there is negative, and it feels like we've still got a long way to go today. You'll obviously get some US traders coming back in and working Friday, bit of a skeleton staff, but this story will get out. People don't stop working because of the holidays. We're in a sort of that society where everyone works 24/7, 7 days a week. That's what it feels like. let's have a look at the China 50 for me will be the interesting one. And again, we sort of had a reversal. 14,500 for me is the key level. And I think a break of there will be this sort of like an additional catalyst to what we're seeing on the indices front. I don't really want to sort of like dive more into the indices because it is quite depressing. However, when I saw this morning, I know my son is sort of involved in cryptocurrencies, but what you saw was the overnight sell-off in the indices, but the actual Bitcoin and the coins were holding up. They weren't sort of like going. It's almost like, is it safe haven? Is it not? For me, it's not, because what you'll get is the bigger institutions who've invested in cryptocurrency, they'll have more onus or more bias towards the sort of like the natural investment vehicles like stocks and shares. So what they will do is they'll sell out of their position on cryptocurrency if they get margin calls on their single stocks, in the sort of hope that the margin calls will only be temporary. They'll be able to hold them positions. But then obviously we've seen it before where even gold last year in March 2020, that had a huge sell-off even after the stock sell-off, when you're sort of thinking this is a safe haven asset, why is it selling off? I mean, it did bounce later, but initially there was a lot of investment in gold, and the bigger institutions sold that gold position to keep the margin calls at bay and keep the investment in the stocks. So yeah, it's been battered this morning. Whether it continues or not, it is, we'll have to wait and see. As a trader, I think, you see these like little moments and you sort of think, right, if I act on this moment, there is potential. Your stop is miles away really, because you've sort of got these gaps on the open. So even sort of like getting short now, it's you sort of you will see some pain before the actual real sell-off occurs. It doesn't feel like a real sell-off yet. So yeah, it's drilling down into shorter term on Bitcoin. We can look at our 4-hour chart, the bearish channel. We've hit the 50% retracement of the up move from the lows around about 39,500, 50% retracement. Good support coming in at 53 and just above, just below 51,000, 61.8% fib. That would be good. But it does feel like it's fallen back into this channel. Again, we can redraw this channel now because we've got that peak that's sort of, let me get the channel up. So we've got a nice little peak here. So for me, that's a better resistance level now. Now, where do we put the bottom of the channel? We could put it maybe here and say we spiked out of the channel back into it, which happens. So support for this channel would come in around about 53,000 today, or this, sorry, today. It's a 4-hour chart. So obviously we've got the crossover on the MACD. Doesn't look too clever, but it really, I suppose, that as the Europeans wake up, and Asian Pacific sort of like is really sort of like taking a look at this. The US later, it's yeah, I think we're in for a sort of further extension to the downside. That's the favoured course of action at the moment, but obviously we have had a big sell-off, potential for a bit of short-term retracement in the meantime. Crude oil, the channel we drew on here is pretty good. We spiked through it this morning, the bottom of the channel.
It's smashed, isn't it, oil?
Yeah, really under a lot of pressure. Let's try and look for some, let's look at the daily chart for some signs of, this was our level of support, 74.70, and it's broken that. A close below there would be negative on the daily chart, and further downside would be expected. We have bounced off the 50% fib. 50% fib is just a nominal fib. We wouldn't class it as one of the key ones, like the 38 and the 61.8. So 61.8 for me would be the target, just above $70, big round number. So yeah, I didn't think we'd managed that at the start of the week. It felt like this reversal we had from last Friday's price action and Monday's price action was going to be strong enough to extend us back up, but it has failed. Shooting star candle, doji, bang, see you later. On gold, again, it's sort of like the safe haven asset. It's had a spike up today, stalled in front of 1810, which will be a resistance, and 1815. But 1834 is the level that would you'd see probably if we do get this continuation in the sell-off. However, remember what happened last time we had something like this. Gold initially went with the indices, and cryptos went with the indices, and the bonds, went with the indices. Everything was going in the same direction for a short period of time until things really settled down and the governments came in and supported it all. So, I feel out of breath now, Joe. But anyway, we'll let's have a look at FX, see if there's any indication there. I'm sure the dollar's got a story.
Well, not really, actually. I mean, I was just looking at oil there, but obviously dollar index has been very bullish. But it's actually taken a bit of a drop today, down by 0.3%. Just really retesting the other side of the broken channel. Seems to have found some sort of buying support in and around there. But it seems as though more money seems to be flooding into Swiss franc and Japanese yen today, which again, are considered safe havens in their own right. So it's quite an interesting one, really. A big move in Aussie Yen. That's dipped down quite considerably, as you can see. This is the daily chart. We've moved down to the 61.8% fib, and we've got a support line here at 81.65. We did overshoot it, but really just into this uptrend line that we've got on the daily chart, and it seems to have done a pretty neat job, to be totally honest. But a lot of hours left in the trading day, so we'll wait and see what happens then. Aussie US dollar is quite interesting as well. That's dipped quite considerably down to a key support here that we've got at 71.05. We've challenged that in the last few hours or so, but still looking pretty negative overall. We've got a head and shoulders top pattern that's kind of looming large over the price action. We did see a bit of an overshoot here on the retest, but the sell-off has been pretty much one-way traffic. Similar situation for New Zealand dollar versus the US dollar. That has tested this support down here at 68.07 this morning. Trading in a bit of a channel. Well, I did have it in a channel, but it broke out, but then failed to really get above this cluster of resistance here. So testing some key support zones. Looking at dollar versus the Japanese yen. I've been talking about this over the last couple of weeks because I like the fact that it appeared to have broken out of a bullish flag to the upside. We made new highs, but obviously there's a big red candle now because there seems to be some appetite for the Japanese yen, given that it's been absolutely decimated in recent months. So maybe we're starting to see some people look for more value in their currency investments, and obviously Japanese yen can be considered a safe haven. If we take a look at euro US dollar, euro is actually performing quite well as well. I don't normally associate that with a safe haven asset, but it's bouncing quite nicely versus the US dollar today, but overall clearly still in a downtrend, and therefore I think any rally is likely to be limited. Looking at cable, bit of a sort of battle here between sterling and US dollar. And no real winner at the minute. It's very flat, probably one of the only currency pairs that's flat at the minute. So these two are doing a pretty good job of netting each other off. The currency pair, this one specifically, is trading at the lower end of this channel. Seems to have found some support, potentially forming a bit of a hammer candle there. But again, it's very early in the session, so I'm not going to commit to calling it that until we get a bit closer to the close of business at 9 p.m. today. That's pretty much it, Steve.
Right. I took up a lot of your airtime there, Joe.
Yeah, well, you have more to talk about. It's certainly a very interesting day, and let's see what the rest of it brings. So the gun to the head trade yesterday, as we sort of briefly touched upon, this was my CAC trade. At 9 o'clock, it was offside, typically, and then obviously just died. If it had gone target down there, it'd been like 11 and a half R, which would have been nice. As it was down half an hour. So forget that. Let's go again. Anything you fancy today? It's going to be a tough one today, I reckon. Do
I
you
think you're
go
right.
with continued weakness, or do you think there's going to be a bounce?
Yeah, I think there's probably going to be a bounce. of some sort. We've seen it at the moment, but it's not a sort of like, wow, the bounce has happened, forget about the issue. The issues aren't going to go away. This story is only going to get worse, and it's going to have more of an impact going into next week. It's just whether you can position yourself in an area where you sort of don't get stopped out in this.
Yeah.
So I do expect that to be the main issue. Right, I mean, it's because of it. Sorry, South Africa. I'm going to trade the South Africa 40,
Bloody
which
hell.
I don't think I've ever done on Talking Bull. There's a gun to my head, and I'm sort of thinking, oh, well, if the
Their
variant
market's
is
only
coming,
down 1.5%.
that's what I'm thinking. It's down 1.5%. Either they're still oversleeping from the Thanksgiving that they may
Well,
have adopted.
they've all got corona and they haven't got to their screens yet.
Yeah, it's sort of like, I haven't got the working from home going properly, but that's sort of from a trading perspective, the issue is South Africa. It's obviously this thing, it spreads around the world, but the focus will be on South Africa, and a similar thing happened with the Chinese stocks when we had Wuhan when it first happened. So yeah, let's get short here. The stop, I'm going to keep a tight stop. Again, not a great idea if you're trying to look for a big return, but 494. Let's try and keep it so I know. Yeah, it's a 40,000. Oh, I don't know, Joe. Where am I going to target? That's 3-1. That feels okay. Already offside, but never mind. There's quite a wide spread in that SA40. Yeah, so I'm getting short here at 63,094. The stop is at 63,494. So a 400 point stop, and looking for 1,200 points on the downside. So 3-1 risk reward.
Lovely. I was thinking about this earlier, when I saw these markets, and if I was trading, I would just look at this and think this isn't for me today, and I would just do nothing. So,
Yeah.
these aren't really the conditions that I favour, but, I think obviously a lot of people will believe there is opportunity here, which, I totally get. But for me, I'd just be standing aside and let this flush out, I think. But I've got a gun to my head, so I've got to do something. US markets, half day today, a little bit of catching up to do. Obviously, the future's given us a little bit of an indication of what to expect. I think there is maybe a defensive element to some of these tech names, but at the same time, I think they're very well owned, and probably people are looking for an excuse to sell if they get it. So I'm going to try and look for. I mean, ultimately, I want this support line to break at 16,143 to sort of 16,121 on Nasdaq, but I'm going to preempt it and sell it now at 16,172. Going to keep the stop quite tight, 16,239, and then going to look for a bit of a whack on the index, really, down to that level there. That swing low from the 10th of November at 15,906. So looking for 4.3 R on Nasdaq today, expecting a continuation lower.
I think potentially we're sort of like we're going to miss the boat by another 24, or well, over the weekend, so it's 72 hours, and we sort of like may see us Monday morning trading down at these profit take levels. But in the meantime, who knows? We could get stopped out.
Yeah,
Um,
very possible. Be
yeah,
careful.
be very careful out there. I was going to mention one other thing. It slipped my mind. It'll come to me.
So in terms of data today, it's pretty empty on the calendar. So obviously the focus is going to be very much on the worsening COVID outlook, and that's obviously got a number of knock-on effects. Potentially coming up to the holiday season as well. So yeah, it'd be interesting to see how the rest of the day plays out.
Yeah, the one thing I was going to mention is this morning when I sort of like got to the screen and had a look at the markets, I thought, this doesn't look good. I sold DAX, and I sold DAX. Funnily enough, around about where it's around about where it's trading now. It's normally the case, Joe. Around about where it's trading now, and I've seen it 170 points on site. It's been down to 15,300, and this is one of my sort of like sort of weaknesses as a trader, when I'm sort of like get caught up in the moment, and I'll sort of like, right, this is bad news, sell it. I'll put my stop in, but I won't put my profit take in, and I'll be sort of like thinking, end of the world scenario. This is going to go down to zero or whatever. So I know it won't, but I'm just saying my stop is about above 15,006. Well, that's where it should be. Should be up here, 15,653. So I'm going to put stop above there. This is my own personal trading, and target 11,000, something like that. I think I looked at the chart this morning. I think I had to look at obviously the weekly chart or whatever. But now I'm thinking, what about 7,600? That would be a better
really?
target.
Come
No,
on.
but I looked about this swing low here,
It's got to be
around about here.
38.2, isn't it? As a first
Yeah,
target.
you know what it is though, but you sort of when it gets to 38.2 and it's really aggressive and everyone's like crying and running about like headless chickens, you sort of think, because I think if it breaks, DAX breaks 14,800, it is, I'm sort of like thinking, this
Double
is it.
top.
This is, you know, this time next year we'll be millionaires, Rodney. Yeah, so really looking at 13,000, but I really like the 11,150 level, 61.8% fib retracement. I don't know, Joe. What do you think?
38.2
That's the thing,
looks
is
like a reasonable level. What's
when
the
you're
measured move
in.
of that top pattern?
Well, what we're going to class it as a double top, maybe.
If it breaks, it's a potential double top.
If it breaks, let's take it from the actual top. Yeah, I mean that gets it down to these levels here. Oh, interesting. February.
Bang in line with the 38.2. Look, that's
Yeah, just in front of
that's
it.
what you like. Bit of conflict.
13,350. I mean, you're talking about something that's 2,000 points away. That'll do, donkey. I'll take that all day long. But I'll get greedy and get stopped out on a spike, and there we go. That's the way of the world. No, it's just sort of like manage your expectations on this, and just be careful out there.
Yeah, absolutely. I think that's the key message and takeaway from today. Okay, I don't think there's anything else, Steve. Let's just wait to see how this plays out and what sort of gaps we're looking at on Monday morning.
Yeah, lovely.
Cool. Have a good one then, everyone.
Lovely. Cheers.
Goodbye.